So this
Right.
we wanted to specifically cover about the 16450 CE issue where this sudden freak trade happened, right? So this is something that can happen to anyone, and that too after the removal of range execution error. This is something a serious issue where everyone needs to get addressed about it, and we should have a perfect solution. So either a broker has to come in with a solution. I read it somewhere that Nathan is already working on it to provide him some solution. So before we go ahead and discuss about it, I wanted to hear from Imanshu, who is the actual person who actually started sharing the screenshot. Like, look how much slippages I've faced, and this is the total loss that I've faced. There are multiple people like him. So we wanted to hear from you, Imanshu, what really happened on that day. What was the order that you really placed? What was that you usually do? That was again you did on Friday. That is something normal. But what happened on Friday that caused you almost wiping out 30% of your account in that single trade?
Yeah, so basically, I observed that the market was sideways or bearish in view. So what I did is I placed an order, a straddle with a hedge in order to protect my margin. And this is what I usually do with respect to protecting my margin and getting leverage. So that I can trade according to my risk management principles and position size. So I did it normally. The trade I got a trade after 9:45 in the morning, and I placed 30% stop loss order on both legs. So that is what I usually do. Okay. So I did it on Friday as well, seeing that the market had a bearish view or it was mostly moving sideways. After it took support. I think at around 9:45 or 9:50. I don't remember the exact time. It bounced from there, so I took a trade at that time, and all was going well. At 2:15, I had checked once. I usually don't check my trade book while the day is on because I have other commitments as well. But on that day, I checked at 2:15 and it looked to be fine. And I went inside, I had a glass of water, and I came outside and I saw that my call side had been hit with a stop loss with a major slippage of more than 500 points. At first, I thought this was some sort of a technical glitch because it usually happens from the end of Alice Blue. So I checked with Alice Blue. They said, no, sir, this is a spike that had happened in the market at that point at 218. So the candle's high was at 803. I argued that the charts didn't catch it. So they're like, no, sir, sometimes charts don't catch such spikes, but it has happened. You can check the market depth. I checked the market depth and it was around 803.5, if I'm not wrong. The high within like not even 2 seconds, it came back to the normal price. So I think this was some sort of a I won't call it a malpractice, but I think this was pre-planned from someone's algo had you know struck the retailers in such a way that I think this scam is supposed to be more than, if I'm not wrong, 100 crores. Because there are a lot of people who've been who've experienced such a huge slippage. I spoke to a couple of people on Twitter itself. One person faced a loss of more than 5 lakhs. Other one, a friend of mine who has another friend who trades. In fact, this argument was very common at that point in time, whether you had placed stop loss market order or a stop loss limit order. So that friend of mine who had a friend who had placed a stop loss limit order, he also faced a slippage of more than 400 points. So placing a stop loss market order or placing a stop loss limit order is a vague argument at this point in time because I think this was some sort of an algo that had gone wrong or it was planned. I don't know what happened, but yeah, it happened within a fraction of a second and more than 25% of my capital got wiped off.
Okay, and that is with respect to you are using one broker, and the other guys who are facing the same issues were using different brokers, not from the same
Yes,
broker,
he was
right?
using Zerodha. Yeah.
Right. And as you said, this happened within fraction of seconds. Within few seconds, again
Yeah.
it retraced back to the normal LTP.
Normal. Yes, absolutely.
So Himanshu, one
Right.
quick question. Like when you mentioned that if you put a stop loss limit order, so usually if I understand correctly, you have a
Hmm.
trigger price and you have a limit price, and
Limit
usually
price.
the traders would put say 20 points or 30 points or 40 points. Say assuming I
Hmm.
sold a call at 100 rupees, I'll put say 150 as my trigger price and say
Hmm.
160 or 170 to cover up my position. So why would anyone
Absolutely.
like a 400 rupees slippage. So you have any idea on
No,
that or
no one, no. See, what happened is no one put a 400 rupees slippage or a
right?
400
That's what
rupees
I
gap.
thought so. Yeah.
He had put around 50 points gap. The bracket was of
Okay.
50 points, but that
Okay.
completely skipped. It went up to 423, if I'm not wrong. I don't remember exactly. It
Okay.
was 423 and it came back down to 105, 107 levels within
So
a fraction of a second.
while coming back, it got executed. Like not on the
I am
upfront.
not sure about that when it got executed, but the thing is, he had
Okay.
placed a stop loss limit order and it
I
got
get.
executed at 423.
Yeah, okay. So what I think, so what I would have assumed is, Kiru, if you would have put a limit order, maybe on the
Hmm.
spike up, it would have not
Yeah,
got executed because it would have turned into a limit buy order. And when the market started coming down, so there was a buyer at 400 rupees that got executed, and that's how that not on the exit point of view, like at that point of time. Yeah, I think so.
yeah,
It's a helpful information. Yeah,
all
Himanshu.
permutations and combinations are possible here, but the fact remains that this is a very, lethal blow for the retailers, those, especially those who are trading for their livelihoods.
Completely
Right.
agree,
So,
Himanshu, and we kind of
so
understand how big of an impact you earn so much and just one particular day and it's just gone. So we,
honestly, it's, look,
So
I
with
have,
respect to
yeah,
no, with
sorry
respect to
to
option
interrupt you.
selling, the returns that we make is no a little returns over a period of time. It gets accumulated with the least volatility. But all of a sudden, when you see such kind of issues, and which is not part of the trading system, if it is a part of trading system, okay, we are now ready to handle the drawdowns. But these are
Right.
not part of a system, and even a slippages of 1%, 2% we have accounted for, we are ready for it. But this is completely
Absolutely.
out of the system. So when that kind of blow happens, no, it is very hard to come back to the break-even level again. To no, even you'll have a doubt whether should I continue the system or not. What if it
Absolutely.
happen
Absolutely.
tomorrow?
I
So in
mean,
this
if you
two
look
days,
at
no,
like
you would have,
general backers,
yes, Imanshu. So in this 2 days, you would have reached out to multiple people, right, Imanshu? So like more
Yeah.
than we search for a solution, you would have searched for a solution. Did you come up with any solution for this so far from anyone?
I spoke to Mr. Jitendra Jain, if anyone knows him here, and I also spoke to Mr. Nilesh. These guys trade of more than 1,500 lots per day. And the only solution that I got from them is algo trading. Like you should shift to some algo, should pay the fees for some algo, and that is how you might be able to curtail such incidences or such spikes in the future.
Very
um,
true,
uh,
because it is not
But this
possible
is
to sit
not
in
a
front.
practical solution for everyone because not everyone, can code or not everyone can afford to pay monthly fees of whatever they're asking for in an algo.
I think so, Himanshu. Even the algo guys face the same. Abhi, kind of
absolutely,
run something.
absolutely.
So
Even the algo guys, everyone face this. Like you place SLM order or SL limit order, everyone's got the slippage. So it has nothing to do with algo.
Yeah, so
Absolutely
I don't
nothing.
know. Then
Because whatever
maybe
has to
I
happen
am
in
not
a second or two
understanding,
seconds will happen in those 1 or 2 seconds.
but this had to be rectified, right? Like this has got to be rectified. Someone has to take responsibility for this.
So way back, I remember,
Right.
okay, maybe it is not purview of NSE or we are too, we can put it out. I still remember there was a freak trade happening. Someone's
Hmm.
algo got misfired way back, sometime back. I don't remember exactly here, but it was a Murat trading day where
Hmm.
Sensex futures
Hmm.
started trading like whatever the levels was, and all of a sudden it started like from 14,000, 15,000 levels of the future to say 3,000 levels, and the next tick would again be 14,000, and then again 3,000 and again 14,000. And I knew few of my friend traded those days. They made money.
Hmm.
At the end of
Hmm.
the day, exchange came to the broker and said, okay, we are nullifying all the trades.
Yeah.
Let's hope this happens
Totally
in this
settle
case
all
as
the
well because I am very like skepticism has come in. I've become very
Oh,
skeptical about whether.
absolutely. Yeah, this is something that the exchange really needs to look into and figure out because it's of course not an algo issue. It's not an issue from the trader. It's, of course, liquidity is the issue, one of the issues, and scrapping the TER, which is your trade execution range,
Hmm.
commonly known as your price outside out of execution range error.
Execution range.
Okay,
Yeah.
that is also a culprit. Okay, so the exchange has to resettle this. Okay, at at a cutoff price, at some price like at the high somewhere, okay, at like 150 or something, okay. So yeah, it's something that the exchanges probably overlooked when they scrapped TER. It's a scenario that they might not have thought of. You can't make like all sorts of assumptions. So maybe it just happens once. Once you've like brought about a change, it just happens. It needs to happen once to for anyone to like figure out what could have been like a possible scenario where you know uh, losses would happen or like bad fills would happen. But having said that, like since it has happened, it is something that the exchange should really resettle.
Yeah, it's
Ram,
such
I
a
have a
funny
quick.
thing that this happens only with
Hmm.
the retail traders. Like, already the SEBI has come up with a lot of draconian rules. There's this one guy who's single-handedly fighting against SEBI, but I don't think that's going to help. So yeah,
So
I
what I
think the trading
suggest
community should unite at
is,
this point in time, to
yeah.
complain
So
or
see,
stand up against the
So it's
exchange or
not just
something
the
like that.
trading community. It's not just the trading community. Okay, we don't have much of a say. Okay, honestly,
Absolutely.
it is
Hmm.
more of the brokers. The brokers need to come together, and
very true.
and the brokers can actually just shut trading for a day or two when the exchange sees that loss of revenue for like 1 2 days. You have lakhs of crores, a lakh of crores trading every day on the exchange. Okay, 2 or 3 days of revenue missed, okay, will sort of straighten them out. Okay, but like I also said, it's something that may have been overlooked at the time of scrapping the price out of execution range. Okay, and there is still time that they can like resettle this and give back the losses, give back that money to the people who
I
made losses.
Honestly, I don't think anyone who's faced losses minds, a slippage of around 50 points or 70 points. But this was not at all expected by anyone, and I think the exchange should do something in this regard. Absolutely, they should do something. Is
I'm
there a
sure
way
as
we
we
can approach
speak.
them or what?
So there are investor grievance cells. If my understanding is correct, there are investor grievance cells where you can put an, kind of, but it is usually against the broker or against anything. This is not against the broker. It's an exchange issue.
Correct.
Exchange issue, right?
So,
Yes.
so it's nothing
So
that
I have
maybe.
lodged a case on scores
Yeah, yeah,
against the NSE,
yeah.
but I am really not keeping any hopes because
Let it
that's
take,
hand
because I'm
hand in
sure.
hand in gloves, honestly.
No, no, I'm sure everybody is looking at it. The regulator is also looking at this very closely. So just take one step back, because this happened. Ram, I want to understand from you, like what was the original rule? Now the water is under the bridge, as we say, right? There was a TER rule. What were the challenges, and now why they've removed it, and what could we as a retail trader do it? I think so that's what will really help us. Okay, we want to fight it out. That's definitely it's going to be part of the agenda. But if that doesn't happen, if we are going to trade it, what would be doing it on that?
Vishal, I would like to put forth my points regarding this. Uh, can you hear it clearly, right?
Your voice is
Not,
echoing a bit, Ram.
not clear?
Much better,
Now?
much
Okay.
better.
Uh, uh, I don't buy this idea whether it is scam, this kind of conspiracy theory. I don't buy this idea. It's not easy to predict market in microseconds, but definitely there are algos running which capture these price differences. But it's not intentional. It's
Yeah.
not possible actually. We try to trade,
Yeah.
we try to create similar system around 2050. We try to capture whenever RBI announces a policy meeting, right? I just put few seconds before uh, policy meeting day, right? That particular 11 o'clock. I put this kind of thing. And also on crude oil Thursday, we used to try to capture these kind of things, but definitely I will tell you, it's not possible to predict market in Microsoft. If someone places order intentionally, definitely out of 10 orders, definitely he will lose 5 or 6 much more than what he's trying to get. So definitely, I don't buy this idea that.
So
So
that's a point here, but I have a point. Is like there was something called as TER, okay? And as an option trader, we were
so,
all dreading that
sorry to
17070.
interrupt you, Vishal, but is Ram implying that this is a technical glitch from the exchange?
Uh, Ram, you know.
I will tell you, there are two primary reasons for this. First reason is liquidity, right? Because since uh, this margin has been increased, previously
Hmm.
people used to place orders even in faraway prices, but now they don't want to block their amount. Right? The first point
Hmm.
is that's the main point. The second point is they have released TR, right?
Hmm.
Just last week. Most of the algos designed to take care of this TR, but there are certain algos it's not reconciled for that change, right? They yet to modify those algos with respect to this TER. So there are
Hmm.
some glitches happen in between. Even I have, I just spoke to 2, 3 brokers, small brokers. Even they don't have exact idea about this. This is yesterday's issue. So definitely, but one thing I can tell you, definitely it's not intentional. It's more
Okay.
just prediction microscopic markets.
Yeah,
It's happened.
so mostly what I see here is, so earlier, remember in other markets, so Vishal, Abhi and Ram, so there was spoofing that used to happen where no, the HFT firms try to place an order, but before the LTP comes to near to that order, they'll cancel it and remodify the order. So they can create an artificial demand there and try to, increase the price. And finally, when once the price is increased to a certain extent, an algo can come and place a real orders and push down the prices. So no, earlier when this TER was there, you cannot place orders beyond this range. But now this range is removed, so you can place orders anywhere in the system. And if in case that happened, so what would happen is, say, suppose 150 was a level, and this is not due to a presence of more buying orders came in and that increased the price. So what I see here is, for every buy order there should be a sell order. Even an absence of sell order can also increase the price. That is exactly what happened in this case. So what happened was, until 150 or 200 there could have been certain list of orders where people would have placed, but after 200 or 250 it could have not been at 256, 257, 258. Instead there could be some orders at 280, some orders at 310, some orders at 400. There would have been wide gap that would have been placed by these HFT firms with
So,
a PF of order. So because of that, the price would have been increased and it would have hit the list of users who have kept the SLM orders. So the
so
spoofing is something that would have come back again.
yeah, this is one possibility. But I also, while talking to Mr. Jitendra Jain, he was of the opinion that SLM orders are not really, they are not, what do you say? I'll say it in Hindi. वो लोग वो किताब के नीचे होता है. Exchange
Okay,
के
Vishal, you have
पास
to translate it later.
SLM orders are under the books. They don't really care about SLM orders because all the exchange cares about is SLL orders. So usually SLL orders are the ones that get placed. While
Prioritized.
yeah,
So what I
prioritized
see
to
as a
say.
simple solution for this is two things. So
It's
one thing is,
yeah.
see, when this kind of spike happened,
Hmm.
say, and 800 rupees is the high price, but you would have
Hmm.
never seen a LTP at 600, 700 or 800. LTP was
Right.
always at around 120 to 130. LTP never
Right.
moved beyond that spike levels. So if you have a condition that is set in your algo, don't place a stop loss order, but just wait for the levels to cross. Scan for the LTP. If the LTP crosses 150, fire the exit order. Until then, wait. In this case, what would have happened is LTP would have not recorded that level at all. So the system would have assumed, okay, the LTP did not cross your trigger level, so let me still wait instead of sending the market, or I mean, instead of sending the stop loss order. This way, what would have
Uh,
happened is the stop loss should have been sitting in your system, but not at the exchange. Once the trigger is crossed, sending this, because this I have did multiple times in my own systems. So I do not place stop loss order in my book. Instead, I'll mention in the program, send the stop loss order only when the levels are crossed. So
uh,
this way, whenever the spikes are happened, it would have not recorded. And second thing, if someone is placing the orders based on candle close, if an example the
Hmm.
spike is there, but the candle close is around 120 or 130 only. So those spikes never close at that top of the levels. It always goes up and comes down. So
I
these are
think
some simple
so.
solutions
Kiru, sorry,
I.
I'll jump in here. If you're trying to get one monkey off your back, you are going to get another monkey on your back. Is basically what will happen is, if you're going to put your stop losses in the algos and don't fire, and what if your positions are there and your broker goes down? Okay, at least when your
That is
stop
it.
loss was there in the system, you at least knew if there was a wild movement that happened, that would have got triggered off. At least you will be safe because your broker was not. But here now with broker, if you're going to keep it at your end, you have not sent any orders to the exchange, and any wild movement happening there, that was the precise reason that everybody started putting, because when the exchange went down or when the brokers were going down, they said, okay, we should not hold the stop loss at our end. But yeah, there are pros and cons of everything, and we have seen both of them. uh,
Right, right, right. So
so
what you
let's
think
yeah, I
that would
think
be a
so.
perfect solution?
Yeah, I think so. Let's take B and Ram's, Arun's view of how are they going to make changes in the new environment, and obviously we will discuss, Himanshu, what as a retail trader we should do to fight that out. So let's do this in
Absolutely.
two parts. Let's do this in two parts. So Abhi, what are the things that you would suggest, and then Ram, I'll also have some
So,
ideas, and
uh,
we can discuss that.
yeah. So first of all, I want to share what exactly happened yesterday. Okay, because like on our platform on Quantiply, we had a lot of these trades. Okay, with these 500, 400 point slippages. Okay, so we had to investigate because it was nothing ordinary. Okay, so we spoke to like Upstocks, we spoke to 4 brokers wherever these orders were punched, and they looked into their order execution flow. Okay, and what we figured was, now because the TER was scrapped. Okay, ideally when you have less liquidity, okay, and you have like a price, the price moving from one price to a much higher price or a much lower price in a matter of like a few milliseconds and seconds. Okay, your order is going to get cancelled, your SLM order is going to get cancelled by the exchange. But now that TR is scrapped, okay, this seems to be like a new mechanism that we've been observing since last Thursday. Okay, wherever, like at say 9:15 in the morning, okay, there are a lot of guys who shoot orders at 9:15 sharp. 9:15 1 second, 9:15 2 seconds, 3 seconds. Okay, we've seen a lot of orders getting converted from a lot of market orders, entry orders getting converted from market to limit. Okay, so they get executed, but you get in the order update you get limit. Okay, so uh, what the brokers had seen, observed, and what we figured was that at around that 140, 150, 145 price, which was like above the high of the day, like which was around 135ish or so, there are a lot of SLM orders that got triggered. And as soon as like the SLM orders got triggered due to lack of liquidity, the exchange has converted the market order to a limit order.
Limit order.
Okay, with a limit price of 0. All right, and this is there in the order execution flow with the brokers. Okay, for the orders that have faces. So the market order has got converted into a limit order with a limit price of 0. When you have a limit price of 0, now obviously a trader cannot place an order with a limit price 0. There would be validation checks on the broker side as well and the exchange side as well, and it wouldn't be allowed. But this seems to be like a mechanism that was devised, or it was already there. Okay, since the TER was scrapped, since the orders wouldn't get cancelled. Okay, this was a mechanism that came into play. Okay, the limit order the market orders were converted into limit orders with a price 0. When you have a limit order with price 0 at the exchange, it can match to any order, any price on the other side. Okay, if you had a limit price of say 120, okay, it would try and match at 120 or below that. Okay, and if it goes above 120, your order would stay open. But with a limit price 0, it would execute, it would match with any other limit order on the other side in the book. Okay, so that is one thing that happened, where the market orders were converted into limit orders with a limit price of 0. Okay, which could be a new mechanism because the TR was scrapped. Number two, because the TR is scrapped, okay, you have one can place orders, one can place limit orders like at considerably high prices, okay, compared to like an average price or the high of the day or whatever, okay. So the circuit limit for 16450 was about 959 or something, okay. So that's a very high price for an option that is trading at an average traded price of 101, okay, and has made a low of 13, okay. The circuit limit is 959. All right, so TER is scrapped. Now people may have placed orders at very high prices like 803, for example, okay. So now you have limit orders with a limit price of 0, and you have passive limit orders in the order book, okay, at 803 and like absurd prices, okay. So you have like a lot of these orders that got executed, okay, at very crazy prices, okay. Of course, if there was, the other thing is the liquidity, right? So 16450, if it had enough liquidity like the 100 multiple strikes, okay, all the sell orders, or sorry, all the square off orders, the buy orders would have gotten eaten, okay, at much lower prices, okay. But
But
liquidity is also an issue in this strike.
Abhi, sorry, I'm
All right.
stepping here in, but I think so. What scares me the most, it's Nifty
Yeah.
options. It's not even a stock options. I understand
Yeah.
it's not a 50 or a 100 strike, and that too happened at the middle of the day. It's not like your
Yeah.
915 or a 320 spike. It is like middle of the
Yeah.
day when the trading is happening. So
Yeah.
that
Yeah.
scared the shit out of me. So, but
So
yeah,
it's also possible that, say, most of the people taking positions at some point, between 9:15 and 10 o'clock, okay, like you have all these straddle sellers, okay, and there may be a common time like 9:20, 9:30 or whatever, and at that point, say a 16450 you could have been the ATM, okay. So you have a lot of these orders getting placed, at that strike price, okay. And that, that sort of like liquidity being there since morning, but then, towards the end of the day there's not enough orders to like fill that buy orders when when the stop losses get hit. It could be anything, because if it was just one thing, it could have been happening every single day, okay. So one thing is the limit price being 0, lesser liquidity, okay, which sort of had all these orders getting filled in at like crazy prices, okay. So my question here was like, if now TER is scrapped, okay, and you have like this conversion happening from market order to limit order with a limit price of 0, okay, where is the market price protection mechanism, okay. Now what the exchange could have done is, if the market order were to be converted into limit order, the limit price should have been about 3% or so, okay, above the trigger price, okay. So if the limit price were to be set at like 3%, so for a say a 150 trigger price, around a 3% would be about 154 or something, 154.5, okay. The limit price could have been 154.5, okay. And if the price were to go higher, at least that order would have stayed open and not gotten executed.
I kind of disagree, Abhi, because this defies the purpose of stop loss market. Because stop loss market is supposed to get you out. But I get your point. But I think
Yeah,
so.
but
That is
then
not a solution that exchange is going to anyways implement. Like, you can't have like a 3%. Otherwise, it is stop loss limit only. It's not stop loss market.
no,
Yes, exactly.
there is market price protection. There is a market price protection mechanism in stocks. Okay, the limit price, they can set a 3% limit price from the trigger price from the LTP. Okay, there is a mechanism. So my point is, now since the TER is scrapped, okay, then this mechanism, the price protection mechanism, should come into play, because
Right.
limit price was 0, okay, there could have been another limit price, okay, which should have allowed the order to stay open instead of getting executed at much higher prices. That was my point.
So I
Only
think
in
no,
the
most
case
of the
that
brokers
TR
should
is scrapped.
have shared this input to this NSE by now. So no, because this is being affecting most of the brokers. Even this is a risk for a broker also. What if in
Uh,
case a guy
Yep.
shorts a specific strike and
uh,
doesn't have a necessary balance?
uh, And I'm pretty sure a lot of order management system guys are also reaching out to exchanges because they've built a lot of infrastructure for managing this TER. Okay, now
Right, right,
TER is being mentioned, whatever the effort and everything that's put is first it is gone, that is okay. But when
right,
something goes wrong on an order management system,
right,
everybody's
right,
going to
right.
question order management system. So order management guys are also reaching out to the exchange to get an understanding. So that's
Yeah.
perfect. Abhi, anything from more to add on this?
Yeah. So there was one more point. So the first point was that the limit order, the limit price was zero. Okay, that is something that needs to change or thought of. Okay. The other thing is that
Himanshu, would it be possible to
for
go
a
on mute, please?
Sorry?
Would it be possible for you to go on mute for a second because we are
Sure.
getting some background noise here?
So the other thing was that if the other thing is like for an option which is trading at 101 average traded price, okay, you have a circuit limit of 959 approximately. Okay, that was the upper circuit limit. Okay, and the low for that option was 13. All right.
Abhi, I'd
If
like
you are going
to,
to
I'd beg to differ. I think I had checked the upper circuit limit when my order had gotten executed. It was 518.
Yeah, I remember the same. Someone
right,
said
so
that no, initially the upper circuit was around 500 levels. Once that is crossed, the upper circuit was revised to 900 levels once that
Revised.
was
Yeah, yeah, yeah,
Okay.
yeah. Even EOD, okay, it was, see, now if you have a limit order at 803, okay, if you have a limit order at 803, the of course the circuit limit has gotten extended. Okay, so as and when like the price moves up or down, it's going to get extended. But the point is that like you cannot have like a very high circuit limit where anyone can place an order like 400 500 points percentage away from like the LTP. Okay, so if you allow that, of course there's going to be a lot of passive limit orders that are going to be placed
that is what no initially they had this
quite high for when so even at 500 where TR is scrapped, 500 is pretty high for an option which is trading at 130, 130. So the circuit limits also that mechanism or even that needs to be rethought of, since TR is not going to be there to like save market orders, okay, from bad fills. The even the circuit limits and the calculation of circuit limits need to be thought of so that people are not allowed to like place passive limit orders at like really far away prices.
right, right, right. So what I see is in case for algo traders as well as for manual traders, in case someone wanted to place a stop loss orders, so now most people will think that okay, let me move from stop loss market to stop loss limit. But the issue is, what if in case if your limit order is not filled and you have not watched it and market starts moving up, the loss will be still higher. So if someone is doing it in manual trading, what I would suggest is, as for now, before the NSE or broker comes up with a resolution, one can continue to place stop loss limit order, and also place an alert in with Sentinel or other tools where it can send out an alert to you, like okay, this particular level is crossed. So once you get the level, instead of keep scanning for the market, keep checking for the market manually, wait for the stop loss levels to get triggered and get an alert through Sentinel, which is a free alert tool. Once you get that, in case if you're somewhere and you're busy with something, and once you see an alert, then you get into the system and make sure it is filled or not. If not filled, convert to a market. This is something which one can do if they are doing manual trading. If someone is going for an algo trade, place in stop loss limit order. If it is not filled in n seconds, say suppose 30 seconds, as Manshu said, no, this spike was there only for few seconds. So just for 10 seconds or 15 seconds. So place a stop loss limit order. It gives some 30 seconds gap, and if not filled, convert to a market. So a guy who is going for algo, they can use this solution. The person who is going for a manual trader, they can use this sentinel kind of an alert, and they can follow that until NC or broker comes up with some solution for this. So that is what I wanted to conclude as a solution.
Arun,
Yeah,
about you?
yeah, Vishal. I just want to put forth my points in simple manner. The problem is because of removal of TR, right?
Arun, I'm so sorry, but your voice is echoing a lot. And Himanshu, there is still a lot of. Sorry, I'm so sorry, Himanshu. There is bit of background noise.
Ah, I'm so sorry. 1 second. I'll just.
Can you hear me now?
Yeah, is it better now?
It's better now, right?
Yeah, Himanshu, better. Ram, it is much better now. Yeah.
Right. The point is, we had this issue because of the removal, right? I hear exchange is going to come with TR again with modified, right? Even we can expect something from Zerodha as early as Wednesday, right? Uh, what can we do? As Kriba said, whenever we get exit signal, we can place order instead of placing in exchange. That's our one solution. Uh, what if not filled? We can use spec to market, right? If not filled, we can wait for a few seconds. Then we can modify to new limit orders. Still, if not get filled, then we can convert to market order. This kind of mechanism we can use it. Other than that, we can select what 100 multiples strikes in Nifty, right? Instead of trading on 50 multiples. These are all temporary solutions till we are getting some concrete plan from exchange, right? We need to customize our algo according to their new system, right? Normally, what we used to do, they had some 40% exchange range, right? We used to place stop loss around 38%, not right. So these kind of things we can do after only knowing exact details from exchange or even Zerodha, right? We have to wait for at least 10 days for this station. Then what we do, we select strikes. Uh, we try to place order just below base high. Again, it depends upon strategy, right? Depends upon strategy. We cannot place every time. What if market trades nearby base high, right? Those kind of things we cannot do. So it depends upon strategy. Then we can place partial SL order, and we can split our order into multiple type. For example, uh, 30-40% in SLL, 30-40% in SLM, so that it will even out. These kind of things we can do. What mainly those who are managing multiple flows are doing, they are fully hedging, they are not placing stop loss, right? So they are using, even if they have to compromise on return, still they are going with fully hedged position. For example, Bank Nifty 400, 500 point away hedging, they are doing it. They are not placing stop losses in the system. This is what we can do as of now. We are waiting something from Zerodha as early as Wednesday.
So
Maybe we can
hedging
discuss.
also, so
What?
hedging does not help us in any way in this kind of scenario, right? What I have understood, because you would have sold 16,450 and you would have bought a hedge of 16,850. The spike happened in one of the particular strike, not on the other. It's not a market-wide limit. So hedge definitely is not a solution to come
Vishal,
out.
sorry to
We don't
interrupt
want
you
to
again,
exit,
but
right?
Go for it,
If there is
what
Himanshu.
no
No
stop loss,
worries.
if there is no
what's
stop
even
loss,
more
it won't
what's
affect.
even more surprising for me is neither for 16,500 nor 16,400 face any sort of a spike. You know,
So
they were
that's because
trading
it's
on.
100 strike. That's an 100 strike. So usually the
Yeah,
100
yeah.
strikes,
So
all
that's what
of
I'm
them
saying. So
will.
liquidity must be an issue here with 16,450.
Yep.
But what about the mechanical traders like myself who
Mm-hmm.
cannot continuously monitor the markets, or who are caught up with other commitments or something like that. So how
See,
do we go about it now?
I
Because
think so. If
SLM
you
was
ask
our.
me, if you ask my answer to this, we have stopped trading for at least 1 week now, and I'm very brutally honest. Okay, we have stopped our systems for 1 week till we get some understanding of what is going to happen. As of now, it is the temporary solution because we don't know what is going to happen. If this happen in Nifty, okay, and
Yeah,
at the money, that's
absolutely.
what I
That is
told you.
good.
At the money strike, afternoon session, and I had debated with a lot of my friends about option selling, and in fact in algo convention also I told about it. Unfortunately for you, Imanshu, and I feel for you. Okay, like we as an option seller are like heroes in the movies where we take out that revolver gun, right? And we take out the 4 bullets out of it, take 1 bullet on it, and just hope that this is not our day, because option selling is risky, right?
Yeah.
But we do all kind of risk management. We talk about all the kind of risk management, but things like this are beyond our control. So till the solution is, still we get more clarity, I think so, I've decided to stop at least my intraday algos, where I don't put stop losses in the system. I will continue to trade them, but the ones which I'm putting intraday stop losses, stopped from Monday onwards till I get some clarity of how we are going to handle that. So that's one of the solution. But as of now, honestly, from me, if you ask me, like Ram gave a beautiful suggestion about put a limit order. But then again, if you are a mechanical, not a system trader, okay, we have to. And what Kiru answered that part of it, like you put into Sentinel, if it goes above, okay, you have to go to your system and change your revise your stop loss whether you got an edge. So I think so it's a combination of both can be done.
And
So
also we can dive
Himanshu, I'd like to add one point here. What Vishal Bhai said is, it's just one solution to just be safe, okay, which is not trade till you get clarity, okay, and this situation is pretty grave that way. All right. The other thing is that you should trade only in like highly liquid strikes, okay. Do not trade in like 50 multiple strikes. Trade in highly liquid strikes only. Okay, that minimizes your risk. That's the only other obvious thing. Now, since in your case, okay, it was an SL limit order, and an SL limit order also faced this issue, okay,
No,
where
no,
an SL limit order should
my
have
was
actually
a
stayed open.
SL market order. My friend's friend had an SL limit order.
Okay. So basically, what it looks like is, so personally, we had experiences with only SLM orders because on our platform we have only SLM orders. But it seems like from what you're saying, even SL limits face this problem. Okay, so it seems like even SL limit is not the solution, which people have been talking about and we ourselves have been thinking about. So it's just better to like be very cautious and trade less till you get clarity, okay, because SL limit doesn't seem to solve the issue. The only other thing you can hope is like if you have to trade, you'd probably trade with a market order, okay, because your market order is going to go in from your algo, okay, and it's very much possible that the algo doesn't receive those spike prices, the ticks, okay, in the price feed, okay, and that also saved a lot of people trading on our platform because they had like market orders as well, and those guys didn't face this. So maybe market orders is a just a temporary a crude sort of solution.
Right,
So
right.
what as a retail trader, Kiru, Ram, like Abhi, if we were in the position of Himanshu, okay, what like whatever about the compensation, obviously we are too small to make a noise, but at least hope these videos goes out and people talk about it, and then they kind of see like what we could do. Like he has already lodged a complaint with Score, I'm sure, and NSC has come out, but one solution that I can think of immediately that Action should have done when this kind of thing, it's not a, see, Exchange always talks about fair and transparent trading. We all know that this is not a fair and transparent trading, because a call option trading at 100 rupees, trading at 100 is not fair and transparent. So they should have actually put a null and avoid for that period, between that period to that period cancel. I know it is as easier said than done, because we are a traders, we will say Exchange will come out with their own set of justification why it cannot be cancelled. But they did, BSC did, Sensex future, I remember they cancelled the orders. So why can't,
So
yeah, but
let's be optimistic about this. Because if this has happened, something, if not this grave, something like this has happened in the past, then we can be optimistic that NSE might consider revising all the orders from during that time frame. But all we
Sure.
can do
And
is be
secondly,
optimistic.
you have already done good thing, Himanshu. You have already shared everything in Twitter and all other mediums. So people
Yeah,
are
because
already
I am sure that
okay.
there are many like me, or in fact, even
Right,
someone who's experienced or faced even worse losses.
right, right, right.
2.5 lakhs for someone like me is a huge amount. But someone who's handling say around
Yeah.
100 lots or 50 lots or whatever, they must have
Right.
faced lakhs, more than 10-15 lakhs, I'm sure, and that is a huge
Very.
amount for anyone. So yeah.
So this is something, no, that is what I said in the beginning. So when it is from the system, because of the trading strategy, if we are facing loss or facing problems, it is fine. But if something that is coming out, which
Yeah,
is not a from
absolutely.
the system, I clearly remember this. See, for an example, I read this somewhere where during this World War, Germany, during the snow period where Germany and other countries were fighting, I remember, Germany and the other troops with their tanks and all this military equipments and everything, they were almost near the border. And because of the heavy snow and heavy winter season, they were halted in a place, and they were waiting for the winter to go down. Or once it gets normal, they thought let them move forward. So they were there, waiting in that particular place for a prolonged period of time. And then once the winter was gone, they were about to move and wanted to defeat the enemy. But what happened was none of the tank was not, it was not at all starting. It was not working. If they were having hundreds of tanks, just only two tanks were working fine. The rest of the 98 tanks were not at all working. They were not even starting. But they had the best equipments, they have the best military, everything. But what actually happened was they were there in this place for a prolonged period of time, and all these field mice, all these little mice which comes in this ground and all these open areas, it came in and it just bitten off all these wires that were linked to this electronic circuits in the tank. So because of that, the tank couldn't start, and eventually Germany was defeated in the war. Who would have thought that no mice would come and bite off these all these wires, and that eventually happened. So that is something which we don't even think of. So most people don't even think about this risk in the execution. So most of the issues we think, and with respect to system, strategies, drawdowns is fine, but something with respect to system and execution is a damn necessary part. We need to make sure that we should have a perfect guideline. Okay, if someone is following a trading system or mechanical trading system, these are the things that you should have. Keep tick everything and make sure even if the worst case scenario happens, we should be able to handle it. So once there was after waiting for the worst case scenario to happen, instead of that, just flip, think in all aspective and come up with the worst case scenario and follow a solution until for now, until NSE or no broker comes with a perfect solution.
NSE surprisingly calls itself the largest, brokerage or whatever the exchange in the whole world, and it's been happening since quite some time now. I faced slippages. Maximum slippages that I faced was in June, and until this happened yesterday. So it's very
Yeah, this
surprising
is
that.
also in line with the because of this margin guidelines issue. The lack of liquidity is also there. So as I said earlier, this issue has occurred not because of more buying pressure, but it's more because of lacking of selling pressure. When there is an absence of order, these such orders create so much of imbalance, and few people like us get unlucky with such kind of fills. So that is what Imanshu. So we have to follow a temporary solution. As Vishal said, either we have to stop at least for a week until we get a perfect solution from broker or NSE, or you have to follow this Sentinel alert based system until whenever your stop loss is hit, you get the alert and then log into the account and then make sure the order is exited. Or as Ram said, follow algo mechanism, convert the stop loss limit order to market if not filled in n seconds. So these are the best three
Or
solutions
trade
that I
in like
can see.
extremely liquid strikes.
Yeah.
Apart from
Right,
Or
that,
trade in.
I strongly advise to diversify strategy. It's very, very important. People will really see, right? Even we get glitches in Nasdaq, London Exchange, right? So this won't stop here. Something will come after a few months. Definitely, one has to diversify strategy. For example, what I do, I allotted some 30 to 35% for iron contract, positional iron contract, right? 20 to 25% option buying, and remaining for option selling. Definitely, even I full time, right? I'm sitting in system morning 6 o'clock to 9, 11 o'clock. Even I do this, right? So definitely, it is very much important to diversify strategy. We should not rely on single strategy. Definitely, not this. So in other form, we will get issues, right? Definitely, this will happen.
right,
So
right,
definitely, we strongly recommend to diversify strategies for retail clients. Very
right,
important.
right. Got it. So Vishal, I know it's almost 1 hour now, so we have only 5 more minutes. I've scheduled this meeting for only 1 hour. Unfortunately, I couldn't proceed further, and you guys would have been busy with the Raksha Bandhan. I'm sorry to bring you guys at this time. No, but we just wanted to speak up this matter so that it should reach out to more people.
Yeah, I think so. This is much
Very
more
important.
needed, and I think so. We can. I think so. We have put out all the points that can be done at this point of time. So hopefully
Right.
we will hear from the exchanges or from brokers very soon.
Right.
Right.
Okay, guys, then stay safe. And
Kirma, thanks for the opportunity. This is the first
thank you.
time that I'm applying in any area.
Well,
Thanks
it's
for
pleasure
coming
to
in.
have Ram.
Thanks, Avi, for
Although not
coming in.
for this topic, next
Yeah.
time we will
Thanks,
want you
Kiru.
to be coming on the nice
Definitely.
topic. Yeah, thanks, Avi.
Yeah. Thanks, Vishal
Thanks,
Bye,
bhai.
Avi.
thanks,
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 Kiru.
Avi.
Thank you,
Himanshu. Thanks,
Arun.
Himanshu.
Thank you, everyone. Thank
Thanks,
you.
Himanshu.
Yeah. Thanks, Himanshu, for joining in.
Yeah.
Yeah, thank you.